Thank you, Mr. Chairman. It's good to see you again, Chair Yellen. I want to follow up on questions raised by Senator Corker and Senator Vitter. As you know, dodd-frank requires giant financial institutions to submit living wills, documents that describe how these giants could be liquidated in an orderly and rapid way in bankruptcy without either bringing down the economy or requiring a taxpayer bailout. Now, a few months ago, the Fed and the FDIC jointly determined that the living wills submitted by 5 of the biggest banks in the country were not credible. And those banks must resolve the problems identified in their living wills by October 1st. That's 14 weeks from now. If the banks fail to do that, the Fed and the FDIC have the power to reduce the risks posed by these giant banks by, for example, raising higher capital standards or stricter leverage ratios. These changes are critically important to avoiding another 2008 crisis, but the banks are unlikely to make them unless they believe that the Fed and the FDIC are serious about enforcing Dodd-Frank. Now, I know by law you must consider increasing capital and higher leverage ratios. What I want today is to ask, can you commit that if any of these giant banks fail to resolve the problems in their living wills by October 1st, that the Fed will use the tools that Congress gave you to reduce the risks posed by these too-big-to-fail banks?
We've been very serious in this review of the living wills, and we've clearly stated a set of well-identified changes that we want to see by October 1st. Now, the decision about what we do if those deadlines are not met, those are decisions that my colleagues and I will need to look at very carefully. What is the appropriate sanction for doing that? But clearly we are very serious about wanting to see these deficiencies remedied and well aware that we have at our disposal the tools that you listed. So I can't pre-commit today to tell you precisely what our response will be. And we will work closely with the FDIC as we have been all along, but we are extremely serious about wanting to see progress and certainly will consider using those tools.
Well, like I said, you're required by law to consider them. What I'm asking for is a commitment here. And I have to say, I don't fully understand why you wouldn't make that commitment. These banks have known this is coming since Dodd-Frank was passed in 2010. That is 6 years ago. And they have been submitting living wills since 2013. There is no provision in the law for all of the extensions that you have given them so far. If any of these banks fail the credibility test on their 5th try, they need to face some real consequences. Otherwise, why would they ever make changes if there are no consequences?
Well, there will be consequences.
Well, I very much hope so. You know, when you found that these 5 banks had submitted living wills that were not credible, you were saying quite explicitly that each of these banks remains too big to fail, and that if any one of them crashed, they would risk taking down the whole economy unless they got a government bailout. The entire goal of the living wills process is to push the biggest banks to fix this fundamental problem. And I am glad that the Fed finally determined that some of these living wills were not credible. But it's not going to mean anything if you're not willing to use the tools that Congress gave you to force these banks to reduce the risks that they're pushing off onto the taxpayers.